May profits be upon you. I'm looking at USDJPY, the US dollar against the Japanese yen. The Japanese yen is pretty weak. If we look at yen futures, you can see it's it's not looking very strong, making lower lows and lower highs, right? So if we go back to the USDJPY, you can see that the US dollar is dominating, right? And the strength of the US dollar, which isn't great, isn't very strong right now. It's kind of almost neutral. Uh, if we can take a look at it, that would make sense, wouldn't it? We can see that it's kind of, it did make higher highs and higher lows, right? Up until Tuesday last week, right? And then it took a nice dip, pulled back, and then moved sideways and kind of weak. So it's bearish neutral, really. A neutral bearish, if I would say. All right. But it's moved into a bullish fair value gap here. So there is we it could find support for higher prices to continue this upward trend. Okay, so that all is to say that the U.S. dollar is looking stronger versus the yen. All right, now what I want you to see is it made these sharp moves over here, like a low, a lower high, and then not quite a lower low, made equal lows, right? But this bearish leg here, after breaking this market structure here, it said boom, hit that, and then broke it. All right, you got to say, okay, after this, I'm expecting lower prices. That's exactly what comes. And then we have this bearish leg. What do we have when we have an impulsive move? We have right behind it, we'll find the market pulling back, making higher high, higher low, higher high, higher low, higher high, higher low, and here we are. So there is reason to say, hey, yeah, market is bullish, right? Why is it bullish? Because it's in a retracement. It's retracing, it's correcting the impulsive move here. Impulse, correction, and then maybe another impulse. This could be setting up for the next lower high so that we can make the next lower low. All right. That's the big picture. Okay. Let's take a look. If we put out Fibonacci's at the swing high to the swing low down here, and we can see that the retracement has come to those important areas that we expect price may find a reason. Let me go use this. May find a reason to uh, act as resistance. These are our, sorry. Uh, these are our resistance lines here, right? Those resistance levels 618, 705, 786. Price could go up to the 786. Why do I say that? Because there is a liquidity high over here. So I'm going to mark that. And that could be a bullish draw, a buy side liquidity target. All right. Also, all right. So that is to say, this correction. Come on, man. This correction can be measured by the Fibonacci here, and if price finds like it's double topping right over here right now, right? I can see price going down, sweeping the double top high because people have taken shorts, take them out of their trades, and then come and sweep all of these lows for sell side liquidity. So this is the move I'm looking for, all right? Because price has already given us a low, a lower high, a pullback after this bearish leg, and I'm looking for this. All right, this looks corrective. This looks impulsive. You understand? So I'm looking for this retracement to end and continue down. So the double top will form. And let me move the Fibonacci because you already got the idea with that. All right, if I can just, thank you. All right, we have a double top here, which is very interesting to me. Yeah, I got the wrong one. All right, so this is going to act as a liquidity target. Um, okay, all right, so and that's going to draw price up there. But what'll get price, as you see, it's pushing down. What'll get price back up here, right? What you want to look at is the impulsive move here. Look at this impulsive move here. It's got to correct. To where? Where would it find support? It would find support at fair value gaps. There goes one here. Boom. All right, we got a fair value gap there, and there's another one. That's the one I'm looking at. All right, I like this one. I like this one right here. Why? Because of that liquidity low right there. Let's see. Let's go to the 4-hour. And what I want you to see is this is a liquidity low, and that'll act as inducement for this area of fair value. This is a doggone order block. It's an area of demand. That's not what I want to do here. Come on, come on. There, a bullish area of demand. Let's move this. Let's get rid of that fair value gap because I don't think it'll make it down here. So we have this buy up. We have this basing, and then a push away with fair value gaps formed along the way. This validates this as an order block for me. And with that liquidity low right above it, it draws price to it. It should find, what do you call, support there. Find it as support and continue higher to take out these relative equal highs on the way to that liquidity low over the liquidity high over here, which is aligned with that Fibonacci retracement level of 786. So that's my analysis. I think we're going up after we come down. All right. We have to have a liquidity event before we make this move up. This liquidity low right here is where I think we're going to make that move. And we'll see. All right. I'm looking for longs. All right. And if price takes out the low of this this area of demand, then I'll stop looking for longs. I'll stop looking for longs until I see a sure enough break of structure. All right. And right now we're going to have a market structure shift once we break this, but we're going into a area of demand, so that kind of calls that rule off. You know, with market structure shift, you know, will be bearish. No, we're going into a bullish order block here, and once it gets mitigated, I'm looking for prices to continue higher. I hope you enjoyed this video. Make sure you hit the like button and boost button, and leave a comment or a question if you have one. I'll see you in the next video. Thank you for watching. May profits be upon you.